What's going on, everybody, and welcome back to yet another video. In today's video, I want to share with you guys a stupid simple trading strategy that you can start using right away to help you start making $10,000 a month. But real quick, before hopping into the video, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so this video is going to be perfect, especially if you like to trade the NASDAQ futures, the ES futures, or SPY or QQQ. Now, there are two things that we want to mark out when we are trading one of these instruments. The first one is going to be the London highs. So the London highs are going to be formed after 3 a.m. Eastern time. And the second thing we want to mark out is the London lows. Now, the London lows is going to be anything after 3 a.m. Eastern time. So let me show you guys some examples. First, you want to make sure that your chart is set to New York time. That's just going to be right down here. Select time zone and then put to New York. So looking at this chart right here, this is where London ended up opening at 3 a.m. New York time. Now, what we want to watch is the price action after 3 a.m. Eastern time, all the way up until market open, which is going to be 9:30 New York time. So that is going to be right here. Now, within this range, we want to identify where is the highest point of price action and where is the lowest point of price action. And we simply want to mark the high, and then we simply want to mark the low. So here's our London high, here's our London low. Now, there are a few different ways that we can trade based off of these levels. The first one is a basic reject of London high or a basic bounce off of London low. And that's always going to depend on the overall price action. The second way that we can trade this is if we break it and then end up falling back down below, that can be a liquidity sweep of the London highs, and we can simply look for a short entry with a stop loss on the reclaim of the London highs. And we'll look at some examples of this here in a little bit. Same thing goes as far as the London lows. Say we end up breaking below it, but very quickly reclaiming that. That could be a liquidity sweep of the London lows, and we can look for a long entry with a stop set right below the London lows. Now, the third way that we can trade the London lows or highs is if price breaks above the London highs with enough strength and it comes back and it reclaims the London high, we can look for a long entry with a stop loss right below. Or in this example, we can see that price broke below the London lows. Well, as it comes back and it retests the level, if it starts to reject it, we can look for a short entry with a stop loss right above that high. So let's just go ahead and look at this example real quick. Say price ends up breaking below the London lows, right? And price comes back up and it retests it and it gives a bearish reaction off of the level, this candle right here. What you are going to look for is a short entry with a stop loss placed right above this high. As always, we are looking for at least a 1-to-1 risk to reward. So let's just go ahead, say we sell too short. There's our 1-to-1 risk to reward right there. You would look to take profits, and then you would simply set your stop loss at break even or slightly in profits at that point. As you can see, price ended up dropping even more for about a 1.5R trade. And in total, off of 2 NQ contracts, we made $2,705 just on this trade. So again, if we break below, we come back, we retest, look for your short entry. Or if we break above the London highs, come back, retest, look for a long entry. Let's go ahead and let's look at some more examples. So looking at this day right here, this could be a no trade day. Why? Because here's 3 a.m., which is going to be this red line right here. And where did market open? Right here. Now, where's the high of the London session and where's the low of the London session? Here's our high and here's our low. And what did we do the entire day? We just traded between the London high and the London low. Sure, later in the day, we did come up and we did end up rejecting off that. So if you had reason to believe that we were going to reject off the London high, you could end up looking for a short with a stop loss right above that high. Or say you had reason to believe that price was going to bounce off the London low, you could look for a long entry with a stop loss set right below the London low. So it all depends on the scenario on this day. Let's go ahead and let's look at another day. So let's look at this day right here. Where's the London open? Let's find 3 a.m., which is right here. And then market open at 9:30 is going to be right here. Where's our high point? Where's our low point? This was the highest point of the London price action, and this was the lowest point of the London price action. So again, there's 3 different things we can look for: a bounce off of the London lows, or a reject off of the London highs, a break and retest to go long or short, or a liquidity sweep of these highs and lows. So we're looking at this right here. Price ended up breaking below the London lows. Say you got short on this candle right here. all you did was simply stop out as price broke above. But guess what? That is a liquidity sweep of the pre-market lows. So yes, you got stopped out short right here, but that doesn't mean you can't go long them with a stop right below here. So let's just go ahead and replay this. So let's just say that you did end up getting short based off of this candle right here because it broke below that London low, it came back, it retested it, and it rejected it. So let's just say you ended up getting short. Well, where's your stop loss going to be? Right above this high right here. Price comes up and stops you out of the trade. Oh well, that's going to happen. But guess what? We now just then created a liquidity sweep because I want you guys to think about it like this. You are not the only person in the world that went short when price retested this London low. Where's everybody else's stop loss going to be? If price breaks back up above the London low and breaks above the high of this candle. So guess what? You're not the only one that got stopped out. There's a very high probability that hundreds of thousands, if not millions of other people got stopped out on this trade. So what can we do? We can then look for price to pull back closer to that London low, depending on how far it pushes up. But you can then look to get long with a stop loss right below here. And sometimes maybe I'll keep it below this London low. It just really depends on the price action. But a safer area to keep your stop is below the low of that liquidity sweep. So now you're risking about $13.45 per contract on NQ. You want to at least be willing to make $13.45 per contract. I just bought a bunch by accident. Anyways, you can see that you ended up hitting your take profit. I accidentally bought 4 instead of going forward candles. So we'll just go ahead and sell 3, move your stop loss to break even, maybe a little bit in profit. And worst case scenario, you get taken out in profit and you just continue to scale your stop loss up. So now just based off of that move right there, you were risking about 70 points on NQ. And so far, this thing has pushed 174 points, which is almost a 2.5 hour trade. So let's just go ahead. Let's look at another example because this happens literally all the time. So heading on over here, 3 a.m. is going to be right here. So the London open, 9:30 New York time is going to be right here. Where's our high and low during the London session? Well, our low is going to be literally right at the open, but our high is going to be this point right here. Price ended up breaking right above that London high, came back, retested it on this candle, made a support. You can look to go long with a stop loss right below here. And again, you can see that price ended up pushing up. So let's go ahead. Let's use the replay mode again. Price breaks above the London high. It comes back and it retests it. Look for a long entry. Stop loss right below this low. You want at least a 1-to-1 risk reward. And as we can see, price ended up making a nice push to the upside. So based off of this move right here on 1NQ, that's $1,735 per contract. Now let's go ahead and look at one final example. Let's find our London open at 3 a.m., which is right here. Where's the New York open at 9:30? That is going to be right here. Let's go ahead and mark the low, which is going to be this point right here. The high is going to be right here. Price ends up breaking above that London high. What does it do? It gets really close to testing it right here before bouncing back up. If you ended up catching an early entry, you still caught a move into high a day. But even a little later, it came back down. Support here, support here, support here. Price ended up pushing even higher. But that is going to wrap up this video on a super simple strategy that you can start using right away on the NASDAQ futures, the S&P futures, SPY, or QQQ. If you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.